U.S. nat gas prices rose on Tuesday, driven by a shift in technical trends and new concerns over supply disruptions as a hurricane approaches the Gulf of Mexico. The National Hurricane Center predicts that Tropical Storm Rafael will strengthen into a hurricane as it moves toward Cuba and the Gulf, potentially weakening to a tropical storm before nearing Louisiana by the weekend. The recent rally in natural gas prices follows declines due to mild temperatures across much of the U.S. However, market dynamics shifted on Monday with news of a tropical storm near the Gulf of Mexico, now upgraded to hurricane status. This has reignited fears of supply disruptions, as the Gulf is a key natural gas production area. Producers are also signaling plans to curb output, creating tighter market conditions that could support prices in the near term. This price action comes amid record trading activity in natural gas futures. Open interest in Henry Hub futures contracts reached a historic peak of 1.7 million last month, indicating strong participation from market players. CME Group reports a 26% increase in average daily trading volumes compared to last year, highlighting robust market engagement amid volatile global energy demands and shifting export dynamics. Weather analysts predict continued mild weather for much of the country, with temperatures in the 60s to 80s in the eastern and central U.S. This week's light national demand outlook is expected to keep bearish pressure on gas consumption, although the situation in the Gulf of Mexico could offset this if storm activity disrupts operations. LNG exports are another factor supporting the recent rise in gas futures, as demand from Europe and Asia rebounds following earlier outages. The U.S. has become a crucial supplier to Europe, especially since the reduction of Russian gas exports, with American LNG making up nearly half of Europe's LNG imports in the first half of this year. Despite debates over new LNG project approvals, the U.S. remains committed to supplying global markets, with both Democratic and Republican platforms supporting energy exports. This steady export flow helps stabilize domestic prices, offsetting weaker domestic demand due to weather conditions. In the short term, nat gas prices are likely to maintain a bullish tone as the threat of hurricane-induced disruptions and higher LNG exports counterbalance bearish domestic weather forecasts. If the hurricane impacts Gulf production, prices may see further upward momentum toward the $2.90 resistance, especially if output constraints combine with increased export demand. However, the extent of any rally will depend on the storm's impact and sustained demand levels in Europe and Asia. In the case of a weak impact, there is potential for prices to dip back toward the $2.50 support level. Nevertheless, if the colder shift in weather forecasts awaited by traders emerges next week, this should reinforce the bullish momentum and provide a foundation for potential further gains toward the $3 target. Please like, subscribe, and comment to support the channel. See you in the next one.